The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 5th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears. What the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone. Now it's not too early. 877-927-6648. Of course, internationally, 727-445-1044. That's how you connect to us internationally. Of course, you can go ahead and send me an email, steve@tfn.com. I'll do my best to respond to that. Instant message me inside the Tiger's Den. I will try to get to everything I possibly can. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the Dow trading down 126 points at 17,823. S&P off 17 points at 2085. NASDAQ Composite down 50 points at 4812. Russell's off 19 points. She's trading 1136. DAX closed down 176 points. The FTSE up 23. Gold is up $19. Silver's up 34 cents. Light sweet crude back 254. So we've got some things to take a look at for sure. To the upside, dollar-wise, leading the charge out here. Individual stock-wise, you've got Public Storage up $5. Rand Gold Resources up $4. Bard CR up $3. Tesaro up about $3. To the downside, you've got BlackRock off $7.50. Core Laboratories down about $7. Tesla off about $7. Google's off about $6. Harley Davidson, the hog, down 11%. That's off $6. But let's begin the day by trying to figure out, hey, what are the markets doing? First of all, hope everyone out there had a great 4th of July holiday, a nice celebration. You know, summer obviously in full swing around the country out here, so that is wonderful. And so just hope it was a great holiday. Hope you have a great summer as we get things kicked off. Of course, as we get things kicked off here with regard to the markets, they're doing what they should be doing at this stage after that nice move higher that we had last week. They're working off an overbought condition. I went from quickly oversold. If we just simply go take a look at this chart out here, let's do this. Let's switch over. Let's take a look at the New York Stock Exchange. Interesting chart pattern today as well. We'll go take a look at that. I wonder if I saved that chart anywhere. Probably not, and I would just have to redo it. But here we're taking a look at the New York Stock Exchange. I'd have to add one more. I'll do it visually so you can actually see it here. But first, what we're focused on. Well, let me do this. We're focused on the center portion. Well, it's panel 1, 2, 3. Right here on my cursor set. The yellow dash railroad track lines is what you're looking at. Now, what the New York Stock Exchange does in the ping-pong effect of moving from overbought to oversold, and yes, it can stay in an overbought or oversold zone. Doesn't have to immediately turn once it gets up to those levels being a 150 reading in the oscillator, and that's the advanced decline oscillator, and or a minus 150 reading in it. We saw that last time that the bottom formed out here inside the New York Stock Exchange, June 27. Prices got down to that nice oversold reading there, got down to minus 165, below 150. And we use these as guidelines. It doesn't have to be exactly to the penny out here, to the dollar, to the value, really is what I should say. If we take a look at the Friday's move, intra-session got above 150. As soon as it got above 150, about 11 o'clock in the morning, that's when I went and sent out a update to my newsletter subscribers, made them aware of what was going on, said that there was a top, a short-term top, that was either here or coming soon. And we certainly got that coming soon last night, July 4th. Out here at about 2 or 3 o'clock in the morning is when we actually got that signal. July 4th or July 3rd, I can't recall. July 4th, I believe it was. In any event, and now what we saw here inside the New York Stock Exchange is a gap down. A gap down. Now, the odd thing about this gap down is we've got three island top type formations inside the New York Stock Exchange up at the highs. The first one took place here. The island formed between the trading session of June 6th, June 7th, June 8th, and those were the 3 days that created the island, because there was a gap to the upside between the close or the high of June 3rd versus the low of June 6th. Likewise, there was a gap down on June 10th. That was below the low of June 6th. That created an island top. Now, island tops, as you know, the most bearish type pattern that can form out there, usually spells trouble. In this case here, inside the New York Stock Exchange, what it did was it created a Gartley buy pattern. Let's take a look at that. Let me go see if I have this tool turned on. I'll show you what that looks like. If I don't see it or turned on, we're going to go ahead and add it. Looks like add is the deal. So give me just 1 second here to go ahead and add my A to B equals CD tool. Okay, we've got that on the screen now. So your A point was, where is that A to B? Now, we're not going to show you that Gartley's buy pattern because the New York Stock Exchange actually didn't do that. Not the way that I would like to call it. So I didn't need to do that. Nonetheless, let's take a look at as the market was moving lower. Okay, well, here's the pattern out here. As the market was moving lower, the New York Stock Exchange I'm referring to, this is back on June 16th. You had price moving lower. You can see that intra-session, and you had a rising advanced decline oscillator. Those are patterns. Those aren't the signals. You got to look elsewhere. But those are the signals of the patterns that say, hey, the move lower, the rubber band stretching is done for the moment. And then we saw the market move higher. It moved higher all the way back up to try to go rescue all these passengers on Gilligan's Island. And in fact, I'd say that they did. I would say that the original island top that we just talked about during the early part of June, once price got up there as it did on June 23rd, that really negated that island top. However, as the markets decided to do, we saw a big gap down on June 24th, Brexit-related gap down. That created the next island top out there. Well, guess what happened today? It is such a smidgen. It's hard. Well, let me see here. I thought it showed that on my chart. Maybe it didn't. High 10,489. Low 10. No, it did. 10,490. So it is so hard to see on your chart. But if you look at the high of June 30th, the actual high is 10,489.75. And the low of Friday was 10,490. Yeah, that one, 50 cents, whatever it might be, actually created a little bit of a gap. And today, you've got another gap down out here. Now, why is this important? Why I believe this is important? Because if these island tops get taken out, they're going to provide to us a very, very significant message. Just like inside the NYSE, we've got this island bottom. What does that really set up for us? That sets up for us the message of nothing more than a consolidation pattern that is ongoing. Intraday trading, galore out here. And if you take a look at the consolidations, is that really any different than this chart here of the Dow upper left, the S&P upper right, the NDX 100 lower left out there? Consolidations that have been going on for a couple of years out here, enough to frustrate bulls and bears. But I'm going to make sure you're not frustrated. So stick with me. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went to that breakout there, we began taking a look at I threw up on the screen here. You'll see 4 different panels if you're watching us on TigerTV. They represent 4 of the cash indices that each of us take a look at and follow. The Dow is in the upper left. The S&P is in the upper right. The NDX 100 is in the lower left. The Russell 2000 is in the lower right. And this shows the long-term consolidation pattern that is present in the markets. So neither bulls nor bears can claim victory. You've got a price that is chopping around. Now, there's nice ranges out here, and some of those ranges have even narrowed down over the past several weeks and months out here. So you want to be able to learn the different patterns that call significant tops and bottoms, because they also work on an intraday basis out here. And you want to be able to look at multiple time frames in order to really gauge what the market is communicating to each of us. In this case here, if we take a look at the Dow began its consolidation. We didn't know it at the time, but we do know now. The Dow began its consolidation back in November 2013, right? That's nearly 3 years. It's not 3 years, but it's certainly 2.5 years, maybe just over 2.5 years, that the market has been moving sideways. Now, the market hasn't necessarily tested the top of this consolidation here in the month of July, but it's close enough to possibly have established that as a significant resistance level. I have signals that suggest I could go either way on the Dow as we speak right now with regard to whether it's going to go test the high or even try to break out of that, as well as I can identify that, the extent of that move may in fact be over, and it's time to go do some type of retracement. In fact, that's really what's going on right now, right? With the oversold condition, overbought condition, the market has to pull back. What we have to do, it doesn't have to, but it is pulling back. It was a pretty clear signal that was out there. Now the question is going to be just how deep is that pullback going to be, and we're going to go try to figure that out here during the show. If you look at the S&P 500 in the upper right-hand corner, same deal. Now, however, a little bit lesser in time. Its consolidation really beginning March of 2014. So that's been about 2 years and 3 months out there. Still a long period of time to frustrate a lot of folks out there. So if you take now, the market's still in an uptrend. from the March of 2009 lows. There's not anything that's broken that uptrend line. In fact, that's what the lower right-hand chart here shows for the Russell 2000, which isn't in a consolidation pattern. It's hard for me to really, with the move lower that we had inside of the NQ back in January and February, what was really going on there was a test of that rising trend line that happens to be the green line. So you've got a nice little wedgie pattern that is out here. We can see how price, really the body of the candle, which is the true essence of price out here, has really just stayed with inside that nice wedge pattern out here. So the Russell 2000, if you're trading this to the short side, if the market really does move down, you want to take a look at that trend line as a, if this turns out to be a longer term move to the downside, as a target level. Lower left, the NDX 100, nothing more than a consolidation. Now, why is it important to identify that? It's just as important to identify this as it is to identify inside of the New York Stock Exchange what it's just given us those same signals between the island tops and the island bottom patterns that we have out here. It's telling us we're in a super consolidation mode out here. Now, you break either one of those, either to the upside or to the downside. The downside, by the way, is a June 27th low. I'd say that's gonna spell trouble to the downside. Likewise, you break the high out here, and I'm going to go with the island top from June 23rd. That high out there, 10,641. It says that you're going to go test the top of those consolidation patterns, maybe even break them. Until we see that happen, that's where we're at, is in a consolidation. In fact, I think we've got a question about a consolidation. So let's go out to Oldsmar and speak with Jim. Jim, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing good. Thank you for taking my call.
My pleasure. How can I help you?
I'm kind of a novice at all this, and I was just wondering about your consolidation pattern that you were showing, like on the Dow and everything. It's not only a long period of time, but it's over 2,000 points from the top to the bottom of your consolidations on that and the SPY and stuff. And I was just wondering, does that make much of a difference when it's such a huge amount of 2,000 points?
Well, the difference that it makes, so from a technical analysis standpoint, the benefit of understanding if you're in a consolidation or not, it really helps you to say, I need to change my trading strategy, certainly from more of a investor to a trader, or at least with regard to the indices, what it tells you is you now need to become a stock picker. So that's one of the benefits of it. With regard to the applicability to the index itself, it doesn't matter how small or large the consolidation is. The way that a technical analyst is going to use that is if the consolidation pattern is broken either to the upside or to the downside, it is that range that the market had been consolidating at that becomes your price target. Typically, when a consolidation is broken, the move is equal to, it's called a measured move, equal to or greater than that consolidation level. Does it always work out that way? No, I wish that it did. Does it work out that way often enough that you want to pay attention to it? It absolutely does. So yes, there's a problem for the bullish market because the uptrend that's in place, if the Dow breaks through that consolidation to the downside, you've got a 2,000-point move. Where would that take you to? The nice thing about the consolidation, just using the Dow as an example, you can just, in my case here, as soon as it explodes up, you can just simply, I like to just take make a second box out here. And of course, I like to really do that. Let's see if I can actually do that. And then you've got a range to the upside or the downside if it gets broken. It also, with regard to a consolidation, the way that it can help you, Jim, is now to the downside, it would say if you break to the downside, you're going to go back to the November 2012 lows out there. That would be your price projection, equal to or greater than. If the Dow were to break this consolidation to the upside, this would say your price projection would be somewhere around 21,175. Now, I'm just giving you ranges here, not the exact number, and we wouldn't even use the exact number. But the other nice thing about a consolidation is if you're not in the move and it is broken out to the upside, you can go ahead and play a momentum move, and you can put your stop somewhere below the top of the consolidation. Likewise, you can do the same thing on the bottom out here. So, where people are trying to find a return, on their money, and you can't really do it in bonds, You can't really do it in the indices out here because you're in this consolidation. Yes, you can sell the top or you can buy the bottom. That's where you'd get that 2,000 pointish type move out here. It really is saying you've got to be an individual stock picker at this case. At least that's my read.
Yeah, well, that makes sense, and I appreciate it. I really enjoy your show. I watch you almost every day, so I appreciate it.
Well, I appreciate more that you're listening out there. But go try the most important thing that any trader or investor can do is be able to come back and say, what type of market are we in? And the markets that you want to try to catch as soon as you can are those consolidation markets. And the reason is because they are the ones that can be the most frustrating. Trending markets are much easier to trade. Right? You just hop on board that train out here. But we are far from any kind of a trending market out here. So the bulls have nothing to crow about, nor do the bears out there. All right, my friend?
Yes, thank you. Thank you very much.
You bet. That was Jim in Oldsmar. This is Steve Rhodes with TFNN. Dow's trading down at 17,811. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at in a let's go take a look at the ES Mini along with light sweet crude, really to be able to get to some of the questions that came in. So what I have on my list here of questions that came in is if I would take a look at silver. No real input as to why you want me to take a look at silver or what you're looking for specifically, but we'll go take a look at it. And the same with regard to light sweet crude. Would I take a look at that? If there's some additional input or something that you're asking me to take a look at, just repost that inside the Tiger's Den, so I'll see it live on my screen here momentarily. But this chart is important. It's still important because of the directional correlation that exists between these two. So if you're watching us on TigerTV, the top portion of my chart is the S&P futures contract. The bottom portion is the light sweet crude contract. Of course, they didn't really take time off for the holiday out here, and so we can see that they continue to trade. We can see that even in a holiday where there wasn't a lot of trading going on the U.S. side, the directional correlation, was beautiful. We can see that both of them are moving lower. Now, where are they moving lower to? Who's the dog? Who's the tail out here? Let's just say we don't know. Let's say when one diverges, though, it has to make you say, something to think about and try to figure out what patterns might be out there. In this case, you're seeing some red horizontal lines. You're seeing some blue, and in the case of light sweet crude, you're also seeing some green horizontal lines on my chart. Now, the red ones are the first ones to pay attention to because those are our 30-minute TAS market profiles. These happens to be 30-minute charts that we're looking at out here. And what we can see is that price is below each of the bottoms of those boxes, the low of the profile. That says that there's no support in sight on a 30-minute basis, either in light sweet crude or in the ES Mini out here, as price is broken below them, and no new profile has formed, at least as of 1:30 in the afternoon. So that's the first thing. What we can say is that where is price likely headed to? Well, the first assumption that I would make is that the bottom of the TAS daily profile, bottom of its daily box, is 2064. So you've got the ES Mini trading at 2075 right now. So there's not anything on this chart that says anything other than price ought to be able to pull back to 2064, unless light sweet crude finds some legs and starts breaking above the current 30-minute profile. But just like light sweet, or just like the ES Mini ought to pull back to 2064, the target in light sweet crude is very likely 45.66 or somewhere in that region. Why? That happens to be the bottom of its weekly TAS market profile. So those are the two targets out here. I would not surprise me to see both of these pull back to those levels. This is just one set of technical indicators that you and I use to gauge where the market is headed to. In this case here in light sweet crude, if we look at light sweet crude, I can see on this 30-minute chart, I'm going to show you a different chart that's just slightly delayed out here with regard to building it, but looks to me like a little hammer candle that formed as we came into 1:30. But if I look at this chart here for light sweet crude out here, again, this it's just I've got a little bit of a delay going on. This the two lines that you see on this chart, the red and the black, two technical tools that I've taught my subscribers how to use. It's not a set of moving averages that you can go ahead and put on your screen out here. It really helps us to understand the message of the market. You can also see how the red line, you want to really pay attention to it. While many people were preparing for yesterday's festivities, this was at about 9:30 in the morning yesterday. Really at 10 o'clock, we had that little crossover of these two. That was a bearish indicator. That was a sell signal inside of light sweet crude. We can see how, in essence, this red line continues to get tested, gets rejected out here. Just recently happened as we came into the 1:30-ish time frame out, or the 1 o'clock time frame. So there's no signal. You don't see price moving lower, doing less weakness out here inside the 30-minute chart. There's no wave count worth counting out here that's going to assist us. So looks like light sweet crude very likely going to head back to that 45.66 level. Like I say, so what's the pattern you would be looking for to say that's not going to happen? You've got to either see a brand new 30-minute profile appear, or you need to see price get up and get above 46 and close above 46.81. Quite frankly, 47.01 would be the number. So what does that say? That says you ought to anticipate continued pressure inside of the markets. Now, does that change the view from last week? Well, one of the things that's interesting that somehow that just happened. Another thing that we can take a look at out here is let's look at this panel here, the summation index for everything. Now this, if you're looking at us on watching us on Tiger TV, I've got 4 panels. The left-hand panel being the New York Stock Exchange, the one next to that being the NASDAQ Composite, to the right of that, the Dow, to the right of that, on the very right-hand side being the S&P 500. Now, the very bottom panel is something worth noting out here. At this stage, all of the we looked at this on the larger scope of the New York Stock Exchange, but all the advanced decline oscillators are above zero. The message to you and I is it still is buyers that are in control of these markets. If we see a close below that level, and then we get follow through tomorrow, that will say that the bulls run up from last week, that the bulls have fumbled the ball and they've lost. And then we have to say, okay, where is it that the bears can take us to? But at this stage, all you're seeing is a little bit of a penalty, that has been imposed on the bulls. But you got to anticipate and expect that penalty, especially with the move that we had to the upside last week. All of the advanced decline oscillators as of 1:36 in the afternoon are above zero. It's still set down. And as I say, if we get a horrible close today, if the net declining issues pushes those oscillator readings below the zero line, and there's follow through tomorrow, and that spells, hey, this could be more than just your normal type of retracement out here. It could be normal, but the problem with the normal retracement in last week's market is that it could be huge, right? Because of that run up to the upside, even if we just take a look at this chart right here, a normal retracement inside of the New York Stock Exchange, just the normal retracement, we're so far away from the first normal, not even normal, but like there's nothing wrong normal, is 10,300. That's another 91 points to the downside. That's going to inflict some major pain if that is what occurs. Does it affect the move from last week? No, because the real normal, not the new normal, the real normal move on a move back inside the New York Stock Exchange is to 10,154. That is like 240 points, give or take, to the downside out here. So, with those moves of last week, it's why we really want to focus on some of these intraday charts. We want to pay attention to the correlation between light sweet crude and the markets to really assist us, with what the market intends to do out here. But as we speak right now, it is still the buyers that are in control. If we go take a look at some volumes out here, get a feel for volume, it's always going to be light volume, right? Not always, but it's going to be light volume, or should be light volume in the summertime. If we take a look at the Qs, let's go see if that theory even holds water today. Now, the Qs here on their way up, we're doing it with volume of 28, 31, and 36 million shares. Made the actual high with 19 million shares on Friday, but 36 million shares. Today you pulled back with 11 million shares. We're at 130. We've been trading for 4 hours. Even if I give it a huge benefit of the doubt and double it, it's light volume pullback because it's going to do 18 million, 19 million shares. It's going against 36 million in essence from June the 30th. So the Qs are pulling back with light volume. The Russell 2000. A little bit of a different story out here. This is Steve Rhodes with TFNN. Let's go check out the Russell and anything else. Oh, silver. We got to look at silver. Hi-ho silver when we get back from this break. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. NASDAQ's off about 60 points right now. Let's go take a look at gold. Sorry that it took me a while to get to it, but nonetheless, we're here right now. If you're watching us on TigerTV, I've got two screens up on my two charts up on my screen. The left-hand side is the daily chart. The right-hand side is a 60-minute time frame. Now, from a daily perspective, if you take a look at the candle session that we have brewing right now, no big deal out here. Hey, did the contract roll over? Maybe somebody in the den out here. Maybe it did. Maybe we're not in August at the moment. Did we switch over to September? Yeah, I can find out another way. Should have done this during the breakout here. We could just switch. Give me just uno momento, por favor. Come on up on my screen here. SI. There we go. Yeah, we did switch. So give me a second here to switch. That way we're going to look at accurate information. So just give me a second to do that. Easy change, easy peasy. Come on over here. There we go. Easy peasy. Okay. Now, if we take a look at it's going to be better. That way we get some volumes that are worthwhile to look at. Now, if we take a look at the candle session that we have right now, we can see here that we saw a nice move higher inside of silver. It got up to a high of 21.22. Now, at 21.22, what was it doing? You know, lots of different A to B equals CD patterns that are out there. If we take a look at the actual candle, today's candle is not a bearish reversal signal. It is at least not a bearish reversal signal yet. You would need a close today, I would think around 1970, or really at the lows might work as well in order to form a shooting star, the exact opposite of a hammer candle. But right now, you just don't have that. With regard to silver, if you're long and strong silver, the area that you really want to be watching, now I'm looking at the daily chart. That's the left-hand panel on my screen out here. The first, and I'm looking to a different screen of mine. The number I would give you is 1850. That number will change. But if you were to see a close below 1850 out here, that would not be very good. That would tell you that the current trend has or is changing in the marketplace. With regard to the market profiles, they say 1807, but I would say you close below 1851. It's going to give you that message earlier. Now, We're going to switch over into the right-hand panel, which is the 60-minute chart here for light sweet crude. And in this, I have both 60 and 240-minute profiles. And if we take a look at the 240-minute profile, let's do this. Let's turn them on one because the different time frames are going to give you a little bit different message. So let's go ahead and turn off the. We got a 60-minute chart. Let's turn off the 240s right now. Give me a moment to do that. We're going to turn, and we're just going to look at the 60-minute profiles and see what message they provide to you and I. See how these 60-minute profiles here have, and not only did you have, we'll just look at the profile box themselves. The one that I'm starting with is the one from July 3rd out here. We can see that this profile, that little point of control, that little dotted line was close to the bottom of the box. That says, hey, buyers are the ones that are in control. In fact, buyers were, and price got up to the top of that box, which, by the way, was 2077 during this time frame out here. The actual high came in at about 8 o'clock in the morning on July the 4th, as we saw price get up to about 2085 out there. Now, price pulled back, tested a level of support, which held until a brand new box here formed. And that was the real clue out here, that there was some trouble in paradise. That trouble being at midnight last night, we saw a brand new 60-minute box of 60-minute profile form on the chart. Why was it trouble? Because the bottom of that box, albeit just slightly lower than the previous bottom of the box, when you start to see them form at lower lows and lower highs, that tells us, if you didn't already know, that the selling pressure that you're seeing is a significant selling pressure and at least a short-term change in trend out here. You want to see resistance areas get taken out to tell you that the change in trend is reverted back to the upside. Likewise, you want to see support levels hold. When they don't, they provide you with great information. Then there was another box that formed out here, and that took place at 7 o'clock this morning, slightly lower. Now, prices continuing to ping pong with inside this. You can almost treat this, Jim, if you're in Oldsmar, if you're listening, the way that you can also take a look at these market profiles are just horizontal consolidation type levels that provide us with information different than what you and I looked at from the longer term of the Dow and the S&P and NDX 100, but similar in nature with regard to ways that it provides us with information. Not similar to being able to identify a measured move out here, but to let you know when key levels of support or resistance have failed. So at this stage here, the sellers inside of silver are lined up, or should be lined up, at $20.14. And buyers are lined up, or should be lined up, at $19.71. If either of those fail, it tells you which side of the trade you ought to not be on, which would be the other side. It can also tell you the side of the trade that you should be on. Neutral being, of course, one of those potentials out here. So on the 60-minute charts, the message here is that if this breaks that there's significant, or should be significant, support at 1970. You break that, price is going to go lower. If we switch over and take a look at the 4-hour chart on this, let's go do that. You're going to see some blue lines show up on my screen out here. And the reason why we have to go to these short-term charts is because the daily's not really giving us a message, but it hasn't broken through support levels. And so now you say, okay, what's going on here in the 4-hour time frame? Now, we could choose other time frames as well. We've got the 4-hour time frame. We can see that price is now backed into a brand new market profile that also formed out here on July 4th at 4 o'clock in the morning. And this says that significant support on the move lower. So if the 60-minute breaks through its support level, you would anticipate that silver's going to get down to 1931. Likewise, what this also tells us, and I don't recall what the 60-minute was. I'm going to put it up on our screen so we know. You'll see one white box appear. The top of the box for the 60-minute profile and the top of the box for the 240 are virtually one and the same. 2016 versus 2014. So at 2016, 2015, that's where there should be some significant selling that would take place. So use this if you are trading, overnight, intraday, or what have you. Likewise, if those levels get broken, they too will assist you in where the market is going. So without much information with regard to silver that I think there were a couple postings in the den. If I didn't answer the question that you were looking for, then just ping me again, and I'll be happy to go back and take a look at it. But that's my analysis, assist of what's going on inside of the silver market. So that leaves us with about a minute in this next segment here. So what have we not really covered? We probably really haven't covered, hey, where can the pullback take us to, with the Dow being off 154 right now and the S&P being down 21. So when we get back from the break, let's go take a look at those levels. Is this going to be a one-day wonder? Is this going to be more than that? We know there wasn't much volume, although we only looked at, we said there was problems with the IWM. Let's go take a look at that here real quickly. The IWM so far, volume of 19 million shares to the downside. Going against, it's still light volume, 42 million shares to the upside on June the 3rd out here. Unfortunately, not a lot in the way of short-term patterns that are giving us a signal that the selling is going to cease anytime soon. Steve Rhodes with TFNN. We'll be right back, folks.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. You've got the Dow off 160, S&P down 22, NASDAQ Composite down 64 points. So let's go take a look at daily charts out here. Let's try to identify some potential areas of support, areas that you're going to be wanting to watch. Now, in the Dow futures, the number 17,647. As long as price is able to hold that level, and that may be where it's targeting, then buyers still maintain control. Let's look at the indices out here. This will assist us a little bit more. Let's look at the NASDAQ Composite Composite first. I'll give you the number. Price right now inside the NASDAQ Composite is trading below a level of support, key level of support, 4804.55 is the number. So watch to see where this closes today. But that would then spell that price could come all the way back to the gap from June 29th, the low out there. That's on the NASDAQ Composite. If we take a look at the Dow Jones Industrials out here, the number is 17,740 that you would be watching. We'll see if that, in fact, acts as a level of support. With regard to the utilities, Dow Jones Utilities, I believe that's already underneath. No, it's not. The Dow Jones Utilities, oh, it's far away. 705.02 out there, so there's no jeopardy of that being tagged. The Dow Jones Transports, I believe, are below support, yeah. And that number was 74.41.17 out here, so they're weak for sure. If we take a look at the FTSE, hey, just out of curiosity, FTSE well away from a level of support. 63.51 would be its number. The FTSE is the one that was supposed to cause all the trouble out here. It's not. It did not get sent to the principal's office, folks. It got rewarded. It got a gold star for its price movement and what it did last week. If we take a look at the NDX 100. If we look at the NDX 100, 43.81 is the level to be watching to see if, in fact, that holds as support. If we look at the Russell 2000, the Russell 2000 has broken below a level of support, so that says trouble in paradise. Paradise of the Russell 2000, 1145 was the number out here. Where does that set price could head to? You'd want to target that little gap up that took place on June 29th. That's in about the 1111-ish type area. Oops, I didn't mean to necessarily do that. I meant to say what would be next up to for us to look at. Russell 2000. Semiconductors, the SOX index out here. The SOX index is below a level of resistance that moved up on both Thursday and Friday last week. Found resistance at Stevie's red line. Now it's trading well below that. 687.80 is the number there. So this is already trading back into the gap. That is the semiconductors. The S&P 500, oh, I know that was one that you were waiting for. The S&P 500, very close to the level of support. Hasn't gotten there yet, but 2079.08 looks like that is the number. So watch for that to become a target for the S&P 500. What is left out here? Well, how about the XAU? Oh, the Wilshire 5000. Let me give you the Wilshire 5000. Then we'll go take a look at the XAU. Wilshire 5000 right now is trading right on support. So the 21,495-ish type range is at 494.76. It's trading right now into a level of support. The XAU, what's the level of support that you'd be watching? Of course, this is moving higher today, but let's see if this is actually above support. The XAU, it is. The number is 97.60, so all points are clear as long as this trades above 97.60. So, folks, stay tuned. I know David White is not here today. I will not be able to be with you tomorrow or Wednesday or Friday. Going to cool off into the Northeast out there for a few days, but I will be back with you on Magnificent and Marvelous Monday. Of course, if you'd like to get my take on what's going on, almost up to the minute, just come on over to the homepage at TFNN.com and sign up for Mastering Probability, and you won't miss a moment. So have a great week. I'll see you next Monday, and take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.